Hello and welcome to Telegraph Studio. I'm Alistair Greener. Now, there's not a single day that goes by when we don't see the financial markets in the news. Well, today we're going to be talking about risk mitigation in the financial markets. And joining me is Mireille Dyrberg and Peter Weibel from TriOptima. Good morning.
Good morning, Alistair.
Now, the financial landscape has changed tremendously. Tell us about some of the changes that have occurred.
So, historically, the OTC derivatives markets were not regulated. They were unregulated markets. But following the turmoil of 2008 and the ensuing financial crisis, a lot of very broad sweeping regulation has been rolled out globally, in the US, in Europe, and in Asia as well.
So what's the purpose of this new regulation?
The overarching purpose is to create greater stability and transparency in financial markets. A couple of different mechanisms intended to affect this. One is portfolio compression, one is portfolio reconciliation, where you align your exposures to those of the counterparty. There's trade reporting to trade repositories, there's central clearing, and there's also a bilateral margin requirement, which is something that hasn't existed hitherto.
These must have put a huge amount of pressure on the financial markets. What have the challenges been with that?
Well, it's a lot of new regulation in a very short period of time. So the challenge is, how does one implement central clearing, trade reporting, portfolio compression, portfolio reconciliation, and now in the next phase, bilateral margining in such a short period of time? It's a very big ask. And so what we found at TriOptima is that the industry is able to achieve significant things by banding together and adopting network solutions. And we specialize in those network solutions where parties join us and benefit from the presence of each other, where the efforts of all benefit the whole constituency.
So network solutions and so many other aspects that you've been talking about here. How can TriOptima help?
So we offer network solutions that for portfolio compression and for portfolio reconciliation. Since 2007-2008, a number of participants in the markets have used our triResolve service to reconcile their exposures to their counterparties, and latterly they also use our service to reconcile the data they have in their in-house systems with what they have in the trade repositories. That's a network effect. We have recently partnered with other industry vendors and with banks to set up a structure for the comprehensive management of bilateral margin, and that will be going live in a bit more than a year. So that's another area where we are assisting the markets. And then, of course, there's portfolio compression.
Portfolio compression, can you be a bit more specific about that?
I'll defer to Peter for this one.
Portfolio compression is a very important tool actually in the risk mitigation box, and risk mitigation, that is really the creator of TriOptima service as such. Actually, compression could loosely be described as cutting off dead wood. It's trades that the market participants maintain in their trading books that are no longer needed, so to speak. They're trades with very similar opposite risk profiles, maybe hedges, and that mean that these trades are not there to reproduce or represent the actual position that the market participant would like to keep in their books. So compression does allow for these trades to be early terminated, rather than actually then waiting until they would naturally expire in 5, 10 or 15 years. What we do specifically at TriOptima with our service triReduce is that we offer this compression in a multilateral way. That means that we have 10, 20, sometimes up to 50 market participants who multilaterally wish to tear up their trades versus each other, so that you could really say the more we have at the table, at the desk, the better results will be for everyone involved.
So that's what compression achieves, but how does it actually work?
It's quite a straightforward process, to be honest. It's every participant or every subscriber to the service will sign up to the website to give their indication that they wish to tear up, let's say, interest rate swaps in sterling, so that their counterparties will also participate and will also submit all their trades to TriOptima, which we then will find a algorithmic solution for, so that in the end every participant will be better off maybe, let's say, hundreds of thousands of trades fewer on their books that they have torn up altogether with their associated cost and risk.
So how does this actually benefit the markets?
It really is risk and cost reduction. I mean, that is really the credo of what we do and what the TriOptima as such actually stands for. And insofar, I think it's we can say that we contribute to the robustness of the financial market as such, and this has, of course, also been noticed by the regulators. We have torn up, since inception of the service, more than $670 trillion notional volume across all different asset classes, from interest rate swaps, credit derivatives, commodities, of cleared and uncleared trades. And surely that is a good thing to have reduced that, and that is the reason why we have gotten all the attention from regulators across the globe.
Okay, so that's the markets. Let's look at the bigger picture. How can it actually benefit society as a whole?
The key really here is liquidity, and let me explain why. A functioning marketplace is dependent on its liquidity. And I think it's extremely healthy for the marketplace to know that there is such a tool like compression as a risk mitigation tool, which allows every liquidity provider to early terminate those trades. And that, of course, is a great incentive to continue to provide liquidity to the market, which in the end, the end users, the manufacturers, the producers, corporates will be benefiting from, because it's them who will then get better market prices for their positions that they need to hedge. And there is a knock-on effect, of course, if they can do that more efficiently, at more cost effectively. That means that maybe you and I will actually fly to our preferred destinations more cheaply.
We've seen big changes. What happens if more big changes turn up around the corner? How can you be sure you're prepared for that?
Well, I think we have proven over again that we are quite capable to come up with new initiatives that actually cater the needs for the industry. And of course, there's a reason why we can do that, because it's our proximity to the marketplace. Many of the services, or the service that we have come up with, have been developed in cooperation with our customers. An example would be triResolve, was kind of born out of triReduce. And there will be other examples where that exactly will also happen. It's the proximity really to understand what are today's problems, and even better, what are tomorrow's problems. This has also led us to partnership with a major infrastructure like leading clearinghouses in like the London Clearinghouse, LCH, but CME, or the Japanese clearinghouse, JCC, or the one in Singapore, and lately also for FX forward compressions, a cooperation with CLS. That really puts us into a very good position to understand what will be needed also going forward.
Yeah, and I mean, those partnerships extend more broadly than that. We also partner for other services. So the trade repository reconciliation, we get data from the trade repositories, we get data from the DTCC, and also this new partnership we formed with Acadia Soft and DTCC and a collection of banks to develop bilateral margining functionalities in anticipation of the new rules that will be coming into effect in a little bit more than a year.
Well, you've given us a fascinating insight into mitigating risk in the financial markets. Mireille Dyrberg and Peter Weibel from TriOptima, thank you very much indeed.
Thank you very much.
Thank you.